To begin with global perspectives, as you know, global economy grew by almost 5% last year, making 4 consecutive years of robust growth. Last year reflected remarkable stability in spite of many economic shocks such as high oil prices and volatile currency movements. Global economic outlook even for 2007 is quite positive, though moderate slowdown is expected in the US economy. And challenges to global economy in the present year as well as in future years are primarily 5. First of all, though oil prices have moderated, they are still high as well as the movement is quite uncertain. There are increasing external imbalances, especially vis-a-vis when we think about the US economy and its trading partners. We all know the US current account deficit has reached already 7% of its GDP, and the other side effect of that is that there are surpluses in economies like China and other Asian countries, even Russia, and their currencies are not making adjustments to that effect. Housing market developments, we all know that the housing prices have escalated considerably in last few years, and there is that fear that they may crash. The phenomenon of global warming and environmental challenges as well as geopolitical uncertainties. The fact I am saying all this is that these are some of the externalities, external exogenous factors within which we all have to survive and plan. However, world today is much better equipped to cope with any fallout as globalization has removed several structural imbalances. Economic rebalancing around the world has happened in favor of emerging economies, primarily China, India and Russia, and that has reduced the volatility considerably. World is no more dependent on US alone to pull it along, and for most of the global analysts, a key issue in 2007 will be China's and India's economic performance given their rising economic strength. Money supply M3 has been expanding at the rate of 21.8% against what RBI has targeted for the banking sector at 15%, putting upward pressure on the inflation, which had reached a 2-year high of 6.73 on 3rd February. Even the data which came out yesterday, the inflation is at 6.46%. It is quite high and it is much above the RBI's tolerance level of 5 to 5.5%. Naturally, RBI has continued with its tightening stance, control of liquidity and money supply in the system, and the repo rate, that is the rate at which banks borrow from Reserve Bank of India if they are suffering from liquidity shortage, it has reached now 7.5%, reverse repo rate at 6.0%, and cash reserve ratio, which was 4.5% 2.5 years ago, today it is 6%.